Hello everyone, welcome to the channel of Tradeometry. Today is Saturday, March 7th. When you see this video, it will probably be Sunday morning when I post this. Let's first take at my P&L for the past week. It was up 10%, roughly 100k. So throughout the past week, my main trade was to short the pump. Basically, I was buying puts when market rallies and sold my puts near the low, and it's been working out perfectly. I had some puts over the weekend before this Monday, and then we had a nice gap down right here on the QQQs. And I immediately closed it right at the gate. So you see this big jump at the open. So that was basically my first trade of the week. And then I bought back the puts towards the close of Monday. And you see this little fluctuation. This is where I bought the put and it went up and down and up and down. It really paid off on the next day. It had a big gap down. I just closed my puts right out of the gate. Even though I didn't close it at the absolute low, it was still very, very profitable. So the first day I roughly made about 30k, and then the next day it jumped from 1 million to 1.05, which is roughly 50k. Very similarly, I re-entered the put towards the close after this big bounce. But on Wednesday, it had a gap up instead of a gap down. So my trade basically failed on Wednesday, but it wasn't too big of a damage. So you see a little bit pullback from 59 to 45k. So I lost roughly about 14k in that day, which is a very small amount compared to my previous gains. And then, but I shorted again. I shorted again on Thursday. Thursday gap down and filled the gap all the way up. I re-entered the put right around the high right here. I made two trades, which are both intraday trades. I made two puts and both were profitable. So Thursday I already made back everything I lost on Wednesday. And on Friday, another gap down. And coming back up, I again entered some puts right around the high of the day because it could not break out. For Friday, I bought puts on SPY instead of QQQ. So I will tell you guys why I bought SPY instead of QQQ on Friday later on. But this is generally what I did this week. I've been very consistent on my thesis that I am bearish. I am very, very bearish. Starting a few weeks ago, and I've been keep making money on my puts. So if you look at my year to date, almost all my gains are from put options. I've been shorting QQQ. I've been shorting IWM, which is the Russell 2000 ETF, and I've been shorting SMH, which is the semiconductor ETF. So I've been shorting a lot of things this year. I probably only made 2 or 3 trades with call options this year so far, and everything's been puts. And this is the result in real time. This is pretty incredible. Very, very consistent throughout the first over 2 months. And the all-time P&L, it's at 4,397%, up over 1 million by now. Now it's official that in the past 2 years, I've made this very small account from $23,000 all the way to over 1 million. Almost the 50x. I will keep compounding on it. I didn't set any goal on this account. I'm just going to keep trading on it because my strategy is working so well and it has been achieving tremendous returns over the past 2 years. A little quick review of my traditional IRA. So all time up 1.5 million, 500%. Year to date 14%. Again, this account is dragged down by some of my long-term investments, which took a big hit in some individual stocks. But because I have hedging positions and I have trades made that I offset those losses, and I've made extra 200K this year so far, and in the past week it's up over 7%, over 100K in the past week. Very, very nice gain overall. That's my P&L. So a lot of things have happened in the past week. There are so many things to talk about. Obviously, everyone already know about the war. It's getting worse at this point. Even though Iran claims the Strait of Hormuz is not closed, but it's basically equivalent of being shut down because there's no ship coming in or out of the strait. And the IRGC, the Iranian Revolutionary Guard, explicitly stated they will target any US or Israeli ships. We still see no sign of de-escalation just yet over the weekend. And you look at the US oil, it has been on a historical run. If you look at the daily chart, the past week it went from 67 to 91. That's almost like a 40% move in a week, which is pretty insane. I also made a video last week saying that will most likely to retest the 2022 highs. I think it's now getting even more likely than ever. So the 2022 high was $130 a barrel, and we're already at 91. If we don't see any de-escalation in the next week or so, more Middle East countries will have to shut down their oil facility because all their storage are full and they will have to shut it down, which makes the supply issue even worse. And for all the countries that desperately need oil right now, but they cannot get any physical oil on their hands, what do? They will have to buy the oil future in the market, which drives up the oil price even higher. And that's basically what happened to silver in January. It was going vertical in January, and eventually we had a blow up top right here, but it was unbelievable. It was going on a historic run. It was more than doubled in over 2 months. If oil can squeeze up to near the 2022 high or even higher, what I see in the current situation in the Middle East, I think this situation can get much worse than the Russia-Ukraine war, because Russian-Ukraine war doesn't really have a big impact on the supply side. Yes, we have a spike in demand, but the supply side is quite stable. I mean, the Middle East wasn't impacted at all. But in the Iran war right now, all of the countries in the Middle East are impacted. If all of the countries, or even half of the countries, have to stop their oil production or shut down for just a few weeks, this price can basically double from here. It can still, like right now it's trading at 91. We're looking at potentially 160 or 180. It has that kind of potential. I'm not trying to scare anybody, but if this situation lasts for another couple weeks, that's the price we're looking at. We got to almost 130 in 2022 on the basis that there was no supply issue at all. And right now we have a huge supply issue. This can get much worse than 2022. And then you know what happens if the oil price goes to 150, 160, 180. The inflation will get out of control. Also, I wanted to make a comparison to what happened in 2022 to what's going on right now. So this is QQQ in 2022. So the first wave, we have a drawdown of 20% from January to March, and then we get a big bounce, and then we'll get the second wave of drawdown, another 27% from high to low, from March to June. And then the third wave from August all the way to the year end, roughly another 20%. So we have a 3 separate wave of 20% plus drawdown in QQQ. Let's look at S&P 500. S&P 500, the first wave is around 14%. The second wave is much bigger at 27%. The third wave is 18%. So we also have 3 separate waves, are very large pullbacks, 14%, 27%, and 18%. And overall drawdown is 27% from peak to trough. And in QQQ from peak to trough, around 36% pullback in 2022. So even though within the year we still have some big bounces, but the drawdown is much worse. I think very similarly this can play out in 2026. If that's what's going to happen. Here, I just posted an article on X regarding why I think we're already in a bear market. So I broke down the reason why I see there's a lot of cracks in the economy. The crypto is already in the bear market. The software is already in bear market. A lot of the consumer discretionary companies already in bear market, and the private credit warning. So private credit is usually for high net worth individuals. Why all of a sudden all these people decide to take their money out of the market? What happened, right? Do they know something that we don't know, right? And this most recently, BlackRock and Blackstone, these two huge Wall Street companies also getting impacted, also limiting their customers to withdraw their funds, just like Blue Owl a couple weeks ago. If you look at the BlackRock stock price, it was down over 7% on last Friday after the news came out that they limit their customers of withdrawing their funds. And this is Blackstone. Blackstone has already drawn down so much, or it's already in the bear market. That's like over 40% drawdown. And also Blue Owl, already in bear market, has a massive over 50% correction. Even you just start from 2025, it's already over a 50% drawdown. And if you do from 2025 February, this is even bigger drawdown. This is already 60% drawdown from February. I'm seeing a lot of cracks in the economy, and the next 1 to 4, I believe it could be the semiconductors. And I've also warned you from last week's video. Look happened this week. SMH, this is the semiconductor ETF. Right, look happened this week. This is Monday, Tuesday, Wednesday, Thursday, Friday. Friday ended down almost 4%. That's a big drawdown. And this gap fill, perfect gap fill. I've talked about this gap fill for a long time. Eventually this gap will get filled, and it did right at the close. It closed right near the low of the day and closed the gap right here. The next, I think it's going to break down to fill this gap right here, which is at 360. I've also break down individual stocks in the semiconductor space, like Nvidia right here. I think it's going to retest 172 or even possibly 164 or even maybe lower. And Micron Technology as well, and a big pullback on Friday. It's a very clear double top right here. Now it's every day is getting more clear. And when I made this video, it was still right here, right? You probably don't feel anything right here, but after a whole week, right here at the neckline, it's teetering, breaking down. Double top, classic double top. Now look at SanDisk, double top, classic double top. It's already broken down below the neckline. The next support is 500. I don't think 500 would hold. A lot of stocks in the semiconductor space is showing very similar patterns. If you look at WDC, also like sort of like a double top, but it's also breaking down. So these are the memory names. The Seagate pulling back right at the neckline right here, teetering. Even look at TSM. I would believe TSM, the Taiwan Semiconductor, is probably had the best fundamentals of all, and still it was down 4% on Friday. It's breaking down. It's already formed a double top and it's breaking down. Unfortunately, I think semiconductor is the next sector to fall, to go into a bear market. And I think S&P and QQQ and IWM, all these major indices will go into a bear market in 2026. And then, of course, the stagflation situation, when we have a weak job market and high inflation. If you saw the non-farm payroll on Friday, it was a horrible number. It was a negative 92,000 jobs. It basically wiped out most of the gain from January, and it was like a 6 standard deviation miss. So the expectation was 53,000 jobs gained, but we lost 92,000 jobs. A 6 standard deviation miss, which also contributed to the sell-off in the market. And then you see the oil price spiking. What we're gonna do with the inflation? When you have inflation and unemployment spiking at the same time, Fed has a very difficult job to do. Even though right now you look at S&P 500. So if we just look at S&P 500, it's still within 4% from the top. But why do you feel so much stress in individual stocks? So this is the year-to-date chart of S&P 500. So the green area you can see are mostly consumer defensive, telecom, industrials, energy, utility, and then the semiconductors and some healthcare. You would argue the only one that you would be seeing a little bit risk on in a typical bull market is probably semiconductors. And all the other green sectors are very defensive sectors, basically. The basic material, energy, utility, industrials, consumer defensive, telecom, healthcare, all of these sectors are green and everything else is red except semiconductors. So this is also why I believe semiconductor is the next sector to fall, because we are in a risk off environment and they will have to go down later on when the sentiment shifts. And I've also made a prediction regarding the Korean stock market, and this is quite epic. So I said this last Friday. Another thing I suspect is a leverage in semi. Koreans are well known for high risk bets. Leverage in semi could implode if Samsung and SK Hynix start to dump. And that's literally the two stocks holding up the Korean stock markets this year. And look what happened on Monday and Tuesday on the Korean stock market. Back-to-back circuit breakers. Unbelievable margin call back-to-back. This is pretty incredible. And I think this bounce, it's not sustainable. It's gonna come back down again. Because for Korean, they are not energy dependent. They need a lot of energy. They import a lot of energies. So the supply shock will be a huge blow to the Korean market. This is a huge blow to the entire world, because when oil price goes up, inflation goes up. It's very, very simple, and we're in a very weak economy, and the entire world have to suffer a weak economy while inflation going up. It's a stagflation for the entire world. If this oil supply shock continues for another few weeks, this bear market could be much worse than 2022. So as of right now, I'm still holding my puts. I have SPY puts and I have IWM puts. This is Dow Jones. Dow Jones has been really, really strong this year in the previous 2 months. But when you see the last week, so this is the start of the year right here at 2026 at 481. Now it's already trading at 475. Dow Jones already turned negative for the year. You look at the pullback in Dow Jones, it's actually more than S&P 500. This is very, very interesting. Now even the defensive stocks start to go down. And this is another reason I believe we are going to a bear market, is that in a real bear market, everything will go down. It's no longer rotation. It's no longer have some cyclical stocks going up and tech stocks going down. In a real bear market like 2022, everything goes down. Dow Jones goes down, S&P 500 goes down, and NASDAQ goes down. Everything goes down. And especially last week, Dow Jones actually dropped more than S&P 500 and more than Nasdaq, which is very, very interesting. The stocks that has been holding up the market in the past 2 months starting to drop even harder, right? And you look at S&P 500 for the last week, it's down 2%, but in Dow Jones it dropped almost 4%. In QQQ, let's do QQQ. QQQ is actually down the least, only down 1%. So this is also why I start to short S&P. I start to short S&P 500 because it doesn't really matter which sector you are in right now, and because Nasdaq had previously suffered a larger drop, it's starting to drop less. And then the reason I decided to short S&P 500 on Friday is because I start to see components in Dow Jones dropping even more than tech stocks. That's what usually a bear market does, is everything will drop. No matter what sector you're in, it doesn't matter. And I also shorted IWM, which is the Russell 2000 ETF. Why do I short IWM? Because I think IWM will be even weaker because the small caps are fundamentally worse than the large caps. They are more vulnerable to the energy supply shock, and on top of that, the private credit risk in the financial market will have an even larger impact for small cap stocks. So I decided to short SPY and IWM, and I'm still holding those puts. And that's all for today. If you wish to join my Discord channel, please check the link in the description below. So in this Discord channel, I have a lot of content to share with you. I've been posting my thesis and ideas where I come up with these trade ideas and the thesis and how I find the particular sectors and stocks to trade. And then I also post my long-term investment, and then this is where I do the live market analysis and answer questions from the members. And this is where I post my trades, and I also post the market news. I will also be posting notes on a daily basis to share the current status of my trades and my mindset, and also the dark pool prints from unusual whales and the option flow from unusual whales. And if I find articles that I recommend and the videos I recommend, the resource and case study, all that good stuff. If you wish to join my Discord channel, please check the link in the description below, and I'll see you next time. Bye.